Hey man, I'm Jusko from ProudMoney.com. Is the Apple Card going to end up in Capital One's hands in the near future? I think yes, and in this video I'm going to tell you why I make that prediction. So within the last 10 days or so, Goldman Sachs, which is the current issuing bank behind the Apple Card, has made it clear that the Apple Card has been a money-losing proposition and a huge money-losing proposition. They haven't singled out exactly all of the losses that are due to the Apple Card versus some of their other operations, but it looks like maybe around $1 billion lost over the last year for the Apple Card, maybe as much as $3 billion since 2020. And Goldman even has sort of messed up the Apple Card so bad that they've got the Federal Reserve probing into their consumer card business to see how it could have gone so wrong. Goldman Sachs has announced that they are restructuring their business, and perhaps the biggest casualty of that is the retail lending business, what we might think of as the Marcus division of Goldman Sachs. So it looks like that's going to be split up. Some of it is going to go away entirely, or maybe some of the products are only going to be offered to high net worth individuals, and then the co-brand credit card and some other loan products that they have going to get their own division. So that's Apple Card, and then you've also got the GM card and some other stuff within that. Now, Goldman did extend their contract last year with Apple for the Apple Card all the way through 2029, and they were talking about launching a new high-yield savings account. But with this news over the last 10 days, it sure looks like what Goldman is trying to do is get themselves out from under Apple if they can. I think they will, and Apple Card will end up in the loving arms of Capital One. Now you might be thinking, Adam, why would Capital One take on the Apple Card when they can see that it is losing $1 billion a year? And then you might also be thinking, Adam, why would Apple let Goldman Sachs out of a contract that they had just extended for the Apple Card? So let's take that second question first. My guess is that when Goldman Sachs and Apple put together their contract, there is some sort of escape clause that allows Goldman Sachs to get out if they pay Apple a certain amount of money, so some big lump sum. Well, when you have a business that is losing $1 billion a year, even if you have to pay $500 million to get out of the contract, that is something that you would be willing to do if you're good at math. And then back to the question of why anyone would take on such a money-losing business. Well, just because the Apple Card is a huge money loser for Goldman Sachs does not necessarily mean that it would be a huge money loser for every other card issuer out there. If we think back to when Apple decided to launch the Apple Card and they were looking for a new partner, it just so happened to coincide with the fact that Goldman Sachs wanted to get into consumer lending in a big way. So I think we can make the assumption, based on what we have seen, that Goldman Sachs pretty much gave Apple anything they wanted in order to win that business, make a big splash, and become a player in consumer lending. And it looks like one of those big concessions was that Apple pretty much said, we want you to approve almost everyone, especially if they are someone that is buying an Apple phone or computer and financing it. So to many people's surprise, a lot of the people that actually got Apple Cards didn't have very good credit scores, and they themselves were even surprised that they could get the Apple Card. So this is not necessarily the way that other banks would do business, but it is a way that Goldman Sachs was willing to do business because they wanted that business so bad. But if Goldman does have an escape clause and they do get out of the Apple Card and Apple has to go looking for a new partner, they don't have the same leverage that they did the first time around. Number one, because they don't have as desperate of a potential partner as Goldman was. And number two, the numbers are out there for people to see how bad the business was under those current conditions. So if Apple's looking for a new partner, they're not going to find a partner that is going to give as many concessions as Goldman Sachs was willing to. So what you have is Apple looking to find a partner that is going to approve a lot of the people that go after the Apple Card, but they're also going to need a partner that feels like they can at least make some money on those type of subprime or near prime customers, and the most likely candidate, Capital One. Not only does Capital One know how to profitably work with consumers that maybe have a little shaky credit, they also have plenty of experience working with large retailers and running their credit card operations, Walmart being the easy example, but also Kohl's, Cabela's, and many others. And then again, on Apple's side, they would have to be willing to make more concessions to allow Capital One to say no to more potential cardholders than they were allowing Goldman Sachs to say no to. The only other banking partner that would really make sense for Apple would be Synchrony Bank. They have the experience working with large retailers. They have dealt with people with lower credit scores, but Synchrony Bank had the Walmart business, lost it to Capital One, and part of the reason they lost it was because Walmart, at least in part, was unhappy with the number of people that were getting approved for the Walmart credit card and obviously felt like they could get a better deal with Capital One. So Synchrony Bank, even if they were maybe feeling a little desperate after losing Walmart, could probably look at what just happened to Goldman Sachs and say, that's going to be us next. But when you look at other candidates, all of them seem unlikely. You could look at Comenity, that has plenty of experience with retail store cards, but probably a little too small for Apple's liking. A lot of the big banks would not touch Apple after seeing what happened with Goldman Sachs. Chase, definitely not going to go down that road. Citi already has the monster of Costco on its books. Maybe that's a break-even operation, but Citi gave up an awful lot just to get that Costco business, and I don't think they're going to take on Apple on top of that unless they knew they were actually going to make money from that. Citi took that business away from American Express because American Express would not give Costco everything they wanted, which tells you that American Express probably not going to give Apple everything that they want either. Bank of America, Wells Fargo, US Bank, they all get into some retail store cards, but probably none of them are going to be risky enough to take on Apple, especially again after seeing what has happened with Goldman Sachs. So my prediction, Capital One, by 2024 at some point will become the issuing bank for the Apple Card. Would love to hear your thoughts on my prediction. Put those in the comment section below. Otherwise, I thank you for watching. And as always, please go to proudmoney.com where we do credit card reviews. We talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not going to leave a comment or you are not going to go to the website, you should watch this video.